Hello, everyone. This is Clay Chase with Torrey Hills Capital. Welcome you to the Taseko Mines Non-Deal Roadshow virtual presentation for August 3rd, 2023. Hope you're all doing well out there in Philadelphia and Washington, D.C. If you're on early, you heard us talking about some of our summer vacations. I hope you're either planning one or getting back from a good one. It's been a lot of fun out here, but we're also working hard because lots of opportunities out there in the market. And this is one that I really like a lot. Some of you probably already know the story a bit, so it's a great time for an update. And those of you that are new to the story, and if you're even following copper a little bit, this is a real hidden gem. It's, I think, a very undervalued company. It's kind of under-recognized, under-followed, underappreciated by the market right now. But I think that's going to change. There's a couple key, major threshold things that they're about to complete here, some key value drivers. I think that once those are done, we're going to see the stock get re-rated pretty good, pretty significantly. So if you're long the stock, it should work out pretty good. Now, if you're following the copper market, you know it's been a bit of a roller coaster. It went up quite a bit. It was almost $5 a pound, which is pretty good, from the $2 or so at the beginning of the pandemic. And then it's backed off a little bit. It's at $3.87 a pound. But that's still a very good copper price for anyone that's producing copper. They love to see anything over $3 copper because they can make a lot of money there. A lot of the analysts are looking at copper as a very kind of a short squeezed market. The supply chain is very limited. It's very difficult to put these mines on production quickly. It takes sometimes a decade to bring a new mine, sometimes more, bring a new mine online. And there's a lot of demand right now because of the electrification of the transportation industry. I don't know if you see a lot of electric cars around or these charging stations. Those all use a ton of copper. Not to mention the extra infrastructure that they need to put in to really get that get those electrons, that juice, to the point of sale where they buy or where they charge cars, whether that's your house or a common station or something like that. So we see a lot of future upside in the copper market. A lot of other people do as well. So if you're watching that market, this is a great place to look. Taseko Mines. Now, like I said, if you have a question during the presentation, feel free to ring in. You can click on your chat icon or your Q&A icon or anything like that. We can light up your microphone. You can ask the question right online. Also, post-presentation, we'll send you a short survey. Try and get that back to us quickly so we can get it back to the company. So let's get going here. Taseko Mines is a mid-tier copper producer. Their operations are both in British Columbia, Canada. They have where their flagship property is located, the Gibraltar project. We'll learn all about that. It's Canada's second largest open pit copper mine. They also have a very interesting project in Arizona called Florence. Learn all about that. It's a different kind of way to mine copper. Instead of going in and crushing rock, you actually mine it a lot like uranium. It's very, very green, it's very efficient, and it's very inexpensive, which is the most important thing. In addition to these two copper projects, Taseko has a very significant portfolio of additional kind of gold and copper projects that are in the pipeline that they'll either develop or continue to develop and put online over the next 5+ years or something like that. Taseko trades on the New York Stock Exchange. Ticker is TGB, like Tom, Golf, Bravo. And the TSX board is TKO. Like a knockout. So currently, Taseko is trading about $1.37 a share, market cap about $556 million. With us today to discuss Taseko's operations is the company's VP of Investor Relations, Mr. Brian Burgo. Hi, Brian. How are you today?
Hey, Clay. I'm good. Thanks. Glad to be here.
Great. Well, fantastic. Thanks for coming on today. Welcome to the program. I'm going to stop sharing my screen so you can put your presentation up, and we're going to be all ears for the press.
Very good. Well, thanks everyone for taking time out of your summer. Hope everyone's having a good summer so far. We're about halfway through, I guess. Yeah, that was a good intro. Thanks, Clay. I'll give you a little bit more details on the company. And as Clay mentioned, feel free to jump in with questions at any time. Try and keep it interactive if possible, and instead of me just prattling on for the next hour. So who is Taseko? We're going to focus on two key assets that we have today. One is our Gibraltar mine. Gibraltar's in BC, south central BC, about a 6-hour drive from Vancouver near the town of Williams Lake. It is operating today and generating good cash flow for the company. We just announced earnings last night, had our conference call this morning. So it did about $30 million of cash flow from operations in the second quarter. Gibraltar's a stable, steady state mine. It's been operating for us for 18 years, but it's been in production since 1972. So over 50 years now it's been producing. So that's been our cornerstone cash flowing asset, really for modern day Taseko, which goes back to about 2005 when the new management team started, and that's when I started. So I've been here about 18 years. Our other key asset, which we're going to speak about, is Florence Copper. Florence is down near the town of Florence in Arizona. We are waiting one final permit from the EPA before we start construction there. We've ordered long lead items, detailed engineering is done, our engineer is ready to go, general contractor's been hired. So we need that one final permit, which we expect here in the next little while, and we will move straight into construction. And this Florence really transforms Taseko. It almost doubles our copper production and more than doubles our cash flow. So it's an important project to us, and it is a very near-term producer. All of our assets, or most of our assets, are focused in copper. We believe it is a fundamental metal as the world transitions to net zero, and we'll talk a little bit more about some of those fundamentals. We've got a very good, experienced management team here. Most of us have been here for anywhere from 7 to myself 18 years. Very technically focused management team. We have mine operators and mine builders. So we have the team that we need to build Taseko out into a multi-asset company, which has been our long-term strategy. As you can see, all of our assets are in North America. We like the North American jurisdiction. We like rule of law. Yes, upfront permitting can be a little bit challenging or take longer than other jurisdictions, but once you have that permit, you don't have to worry about the government stealing the asset for you or other geopolitical issues that we're seeing around the world. And we have a very strong balance sheet. We finished the quarter with $86 million cash on hand, and we'll talk a little bit about that. We do have other projects. We have a pipeline of other projects, including our Yellowhead gold or copper gold project, also in BC. New Prosperity, which is one of the top 10 undeveloped gold copper projects in the world. And then we've got an niobium asset as well in northern BC. Niobiums, we're not doing a lot of work on this project right now, but niobium has changed, and we're seeing a lot of research being done using niobium as a battery metal, actually replacing the graphite in batteries. And so we've been watching those developments to see what, that could really change the niobium market. So we're watching the market, but not spending a lot on that project. And actually, we're not spending a lot on Yellowhead or New Prosperity. All of our focus really is our Florence Copper project in terms of our development projects. Just to clarify, most of what the dollar amounts I speak in today will be Canadian dollars. I'll try and tell you if I'm speaking US dollars. I do go back and forth because for our Florence project, we do speak in US dollars. So we trade on the NYSE and under the, as Clay said, TGB is our ticker. We also trade in Canada and also in the UK. But most of our volume, most of our volume is traded in the US. We probably trade 3 to 1 US versus Canada. In terms of analyst coverage, we're covered by most of the standard Canadian banks and broker firms, most with a strong buy and a pretty decent return to current price. And those are just updated as of this morning, post Q2 earnings. I mentioned we had $86 million cash on hand Canadian at the end of the quarter. We also have some debt on our balance sheet. We have a US $400 million high yield note. That was a refi done in February of 2021. We took an existing $250 million note, upsized it, and it's a 5-year note, pays a 7% coupon, so it's due in 2026. And the reason we upsized it from 250 to 400 was to put cash on the balance sheet to build our Florence copper project. So we'll talk more about the financing as we get into the presentation. Our shares are widely held. We have no controlling shareholders. As you can see, management as a group is the largest holder. We do have one shareholder. They don't file, so they're sitting at about 7%. But after that, it would be management, and then it falls down after that. And actually, a couple of our largest shareholders are ETFs. Global X, which is the big copper ETF, is 2.5%. And the iShares Infrastructure, which is a US ETF, we're included in, and they own about 2.4%. But yeah, very widely held. And we're probably 35 to 40% institutionally or ETF held, and the remaining is retail. So a little bit about copper. We have focused on copper. We do believe in the long-term fundamentals. As the world transitions to net zero by 2050, we know that huge amounts of copper are going to be needed. And where we see the issue here is demand is going to be there. It's where is all that copper going to come from? It takes anywhere from 18 to 20 years to build a copper mine, a large-scale copper mine now. So the industry can look out with reasonable certainty, 10 years, and we know which projects can come on stream. And those projects aren't in the pipeline. There's not enough projects in the pipeline to keep up with the type of growth needed for the world to meet its climate goals. This year alone, we've had 2 large mines start up, one in Peru, it's Anglo's big Quellaveco mine, and one in Chile, which is Teck's big QB2 mine. Combined, those are about 400,000 tons of annual production, relative to a 25 million ton market. So those are 2 very large mines. They're in process of ramping up, but all of that new production has been absorbed into the market. And we still have a very strong copper price sitting at about $3.90 today. So the demand is there and the demand is growing, and we don't have the supply. We did, as Clay mentioned, price of copper was up close to $5 in last year. It's come off those highs and it dropped down to the low $3 and then has subsequently bounced back up to about $3.90 today. People have a short memory. It was only a few years ago where $3.90 copper would have been phenomenal. You look back to 2020, the price of copper was sitting around $3 or lower. We are in a very good pricing environment where pretty much all copper producers generate good cash flow. But we're still below the incentive price to build new mines because capital costs have gone up. They're just getting more and more expensive to build. So the incentive price to build a new mine today is probably around $425 or $450. So we're starting to see projects get deferred, pushed out further. And that's only going to exacerbate the supply-demand fundamentals moving forward. And if 390, 375, 390 is the new base, the new trough pricing for copper, then the next peak could be well past $5. So we're very bullish on the future. S&P did a study, this is about a year ago, and they looked at how much copper would be needed for the world to meet its climate goals through 2050. And what they estimate is by 2035, so only 12 years, 13 years from today, we'll need 50 million tons of copper. Today, the market's only 25 million tons. So that's a doubling of today's supply. And those mines aren't in the pipeline to do that. So we are headed towards a pinch point. It's general consensus that the market will be going into a deficit, a severe deficit. It's just a matter of when. We don't know if it's 12 months or 18 or 24 months from now. But the market is balanced today. So as demand continues to outpace supply, that deficit will grow, which will only put further pressure on pricing. A lot of talk about EVs. Obviously, they do use a lot more copper than a conventional car, and we're seeing more and more EVs on the road today. Actually, I just saw a stat that says for the world to meet its climate goals by 2035, we'll need 350 million EVs on the road at that point. That's about 300 million more EVs than today. So that would be about 45 billion pounds of copper just to produce those EVs. So, the types of numbers we're talking about are huge. And again, it all points to a market that is going to get tighter and tighter. And the one thing about copper pricing, it is very elastic. The price of copper goes from $3.90 today to $5. So it adds $75, $100 to a price of a car, that can be passed along. Same with building a house, or an air conditioner, those costs can be passed along. So the price of copper can go to $5 or $6 or $7. Substitution, we've seen very little substitution because there's not a lot of things that can replace copper that haven't already replaced copper. So yeah, we're extremely bullish and we will continue to focus in copper. So let's talk about Taseko's assets. I'll start with Gibraltar. As I mentioned, Gibraltar is producing today. It's a steady state mine for us. It has been our cash flow producer for the last 18 years. It's our cornerstone asset. We've taken all the cash we've generated here, put it back into this mine and our other assets. So it will produce 130 million pounds of copper per year over the rest of its mine life, which is 22 years. So it's still a very long mine life ahead of it, even though it's been in production since the early 70s. Life of mine cash costs here are about $2.10 per pound. We have been a little bit higher recently. A lot of that has been a result of higher diesel costs. We burn a lot of diesel in our trucks. But the offset is we've had higher copper pricing as well. So very healthy margins here. At $4 copper, there's nearly a $2 margin on 130 million pounds. We own 87.5% of Gibraltar. So of that 130 million pounds of annual production, about 115 million pounds is to our account. So we actually bought Gibraltar in 1999 for $1. It had just been shut down by the previous owner. They were going to scrap it. We kept it on care and maintenance until 2004 when the price of copper started to rise. Went from sub 80 cents, went over $1. And the idea was we could fire it up on a shoestring budget, generate a bit of cash for a couple of years until the price of copper cycled back down below $1, and we'd shut it down. Well, price of copper never cycled back to those levels. So we started generating cash, and then in 2006, we made the decision to start spending some money and investing in this mine. As I mentioned, it was built in 72, so in 2006, it was a pretty tired, worn out mine. This ended up being a 6-year, $800 million multi-phase project. We just continued to expand it and modernize the facility, replace the whole mining fleet, all new trucks, new shovels. We took the milling capacity from about 30,000 tons per day to what it is today, which is 85,000 tons per day. So annual production went from 45, 50 million pounds per year to 130 million pounds. That 800 million was funded out of cash flow. We operated through that whole period, and there was some very high copper pricing during then. In 2010, we also sold 25% of the mine for nearly $200 million to a Japanese consortium. We just recently, bought out one earlier this year, we bought out one of those partners, which is why we took our interest from 75% to 87.5%, which is what we own today. And then our first high yield bond was in 2011 for $200 million, and that funded that final phase of the expansion. So today we've got a long life mine, strong production, stable production. So Gibraltar will continue to be our cash flow generator for indefinitely. We have a very good safety and environmental track record at Gibraltar. We've won many safety awards, including the Safest Mine Award, 6 out of the last 9 years, or 6 out of the last 8 years, and a number of environmental awards and tailings, specifically to mine reclamation and tailings. That picture there, the gray building in the middle, that was the original 30,000 ton per day concentrator. The blue buildings, that's all the new infrastructure, the new milling we have built over the years. And in the background, you can see one of the tops of one of the pits. There's a very large site. We've got 22 years of mine life ahead of us today. We are spending a little bit on exploration, so it's very likely that the 22 years will get further expanded. As I mentioned, we announced Q2 earnings today. So the first half of this year, we've done about just under $60 million of adjusted EBITDA on 53 million pounds of sales, and $70 million of earnings from mining operations. Production this year, because of grade, will be back-end weighted. So we will produce more in the back half to get us to our guidance of 115 million pounds of copper this year. So we'll see a stronger second half with higher production and lower costs. So we should see very good, strong economic returns in the back half of the year as well. It's highly levered to the price of copper. So, you know, at today's price, it can generate a lot of cash. And if the price of copper goes to 4.25, we're completely unhedged. So we got all that extra from 390 to 425, that goes straight to the bottom line. The one thing we do here is to protect our cost structure is we buy put options. So we are protected for the balance of this year with a minimum price of 375 per pound. So we know in the worst case scenario, for most of our production, we'll get a minimum price of 375. And we've done that consistently since 2009. It's nice to have a minimum price set. Like I say, it protects our cost structure. We know in the worst case scenario, Gibraltar will generate enough cash to pay our debt, to pay our corporate G&A. And then the upside goes to into the bank account and to pay for our other projects. So that's Gibraltar. Let's talk about our future with Florence. As I mentioned, Florence is down near the town of Florence in Arizona. It's about an hour out of Phoenix on the way to Tucson. When in production, Florence will produce 85 million pounds per year. So a little bit less than Gibraltar, but the cost structure is extremely low. The costs at Florence will be about $1.10 per pound relative to Gibraltar at $2.10, $2.20 per pound. So half the cost structure. So it doesn't quite double our copper production, but more than doubles our cash flow because of that cost structure. And again, Florence is a long mine life at 22 years. Now we are going to use a different process here. Florence won't be an open pit copper mine, and we'll talk a little bit about that here in a sec. We bought this project, or we actually bought Curious Resources, who owned Florence, back in 2014, and we invested a lot of money since then. It's located right on the highway. All the major infrastructure is there. They got the highway, we've got power, and rail infrastructure is not too far away either. We issued a feasibility study just this past March. Again, 22-year mine life with annual production of 85 million pounds of copper per year. Estimated remaining capital to be spent to build this is $230 million US. Nearly $1 billion NPV with a 2.5-year payback and nearly a 50% internal rate of return. So, and that's driven by the low upfront capital and the low operating costs. So this is a fantastic project. We just can't wait to get this final permit and get to building the project or building the commercial facility. So the process we're going to use here is called in-situ leaching or in-situ copper recovery. Hasn't been commonly used for copper, but it's used extensively for uranium and also for potash. About 40% of global uranium production uses in-situ mining. The reason we're going to use it here is because we have a very specific type of ore deposit that makes it amenable to in-situ leaching. At Gibraltar, the copper is in hard rock. We need to drill it, blast it, grind it, regrind it to get that copper away from the rock. At Florence, Mother Nature's done all this work for us. It's a highly fractured, rubbleized deposit. So when you pick up the core, it just crumbles in your hand. And that's one of the things that makes it amenable to in-situ leaching. So what that is, we're going to drill a well field. The well field consists of injection wells and recovery wells. We inject a solution down into the deposit. The deposit's about 450 feet down to 1,000 feet deep. So we inject these solutions down into the deposit. As that solution migrates through the deposit, it leaches out the copper and turns it into a solution. We recover that solution and then we produce a pure copper cathode in an SXEW plant. And the SXEW plant, that's conventional processing. There's nothing special there. So this is a very good process. Not only is it low capital and low cost, but from an environmental perspective, it's a very green way to extract copper. As you can see there, freshwater use is 80% lower than a conventional open pit, 65% less energy use, and 70% less carbon emissions. At Florence, we're not going to have a big haul truck fleet burning diesel. All we really have, we're not digging a big open pit, so there's no permanent change to the landscape. It's very, like I say, it's right on the highway. Nobody will know we're there producing 85 million pounds of copper per year. When we're done here in 25 years, the site could be returned. It could be turned into a golf course, residential neighborhood. This is a great method to extract copper. Now, because in-situ leaching hasn't been commonly used for copper, we decided to build the project in 2 phases. The first phase was a $25 million test facility. We had to go through a whole permitting process for that test facility. We got those permits in 2018. We built the test facility, which included 4 injection wells, 9 recovery wells, and 11 ground monitoring wells. We operated that in 2018 to 2019 for 18 months. We produced 1 million pounds of copper from the test facility. So yes, it was much smaller scale, although the wells we drilled were all the exact same scale wells we'll use in commercial production, just not as many. So yeah, we produced 1 million pounds of copper over that 18 months. And the reason we operated the test facility is, 1, to prove to the regulators that we can inject these solutions, control these solutions 1,000 feet down and protect the environment. And 2, to prove that this process will work at Florence. We proved both those without any doubt. We proved those without any doubt. We had no issues. We had no issues with our permits, no non-compliances. We did no permit exceedances. We operated within the very strict guidelines set out by the EPA and the Arizona Department of Environmental Quality. So we showed that. And from a technical perspective, we proved out many of the assumptions from our modeling, that from our technical reports. So the test facility was very much a success. So we finished that in 2019. And then we needed to amend the 2 key permits for commercial production. So those 2 key permits were the Aquifer Protection Permit from the state, the Arizona Department of Environmental Quality, and the Underground Injection Control Permit from the US EPA. The state went through their process in 2020, and in December of 2020, the state issued us our final aquifer protection permit. So we've got one of our two key permits. The EPA started their process in 2021. In August of last year, the EPA issued the draft underground injection control permit. That started a 45-day public comment period. During that public comment period, we had overwhelming support from the written submissions. And at the public hearing held by the EPA, everyone that spoke at that hearing was in favor of the project moving forward into commercial production. So that ended at the end of September last year. And since then, the EPA has been preparing responses to the comments received and preparing the final underground injection control permit. Where we're at now is we believe the EPA, and this is based on our regular discussions with the EPA, we believe they are in the very final stages and getting ready to make a final permit decision. We don't have an exact timing when that could be, but we do believe it is coming soon. And again, that's based on our dialogue with the EPA, and we have a regular dialogue with them. So we're very hopeful that in the coming weeks, month or two, that the EPA will issue the final underground injection control permit. Again, we don't have a specific date, and the EPA is not they're not obliged to issue it at any time frame. But again, based on what they tell us, we do believe it's coming fairly soon. So while we've been going through the permitting process, we've been working on procurement of long lead items. We've been doing technical work and completing the financing package. So as I mentioned, as of March 30th, there's $230 million left to be spent. We've already procured $80 million US of long lead items. And that is all arrived or arriving at site or en route to site today. So we've spent $80 million. We've got all the long lead items in place that we need. And now we've got $230 million left to spend. So where's that money going to come from for that? Late last year, we announced a partnership with Mitsui and Company USA. Mitsui will contribute $50 million US towards the construction costs. In exchange for that, they'll get a copper stream, a 2.7% copper stream. And then they have the option to invest a further $50 million, and that copper stream will then convert into a 10% equity ownership into the project. But in terms of what will be available for construction financing will be the first 50 million. The second 50 million will come later. So we've got 50 million from Mitsui. We've done an equipment leasing deal with Bank of America for $25 million. We have cash on hand of $80 million Canadian. And then we've got a corporate revolver of US $80 million. So most of the funding is in place today between Mitsui, Bank of America, and our credit facility. Now, we would prefer to hold back our credit facility and use that more as a backstop. So we continue to advance discussions on one or two asset level transactions. And the two transactions we've spoken about would be selling a small royalty on the copper and also a small project loan with the bank. Either of these could be in the $50 to $100 million range. And we're looking to roughly raise about $100 million of new capital to complete the funding of this project. So I think we'll have more to say. We're well advanced in those discussions, and I would say the timing of those discussions is tracking similar to the final permitting with the EPA. Over and above that, as I mentioned, we have cash on hand, and we have cash flow from Gibraltar. And then we also announced an ATM financing our facility back in May, an at the market facility. This is a tool which we have the option to use, but not the obligation to use, to sell shares from Treasury into the market to raise additional capital.
I'm
no-
sorry.
We believe our equity is undervalued relative to the value of our assets. But in the right circumstance, at the right equity valuation, it may make sense to fund some of this project with our own equity. So the ATM there is a tool. It's just another tool we have how we may want to fund Florence. But we think we'll, by about the time we get this final permit, we will have the financing dealt with and the full financing package finalized. So here's a couple of our laydown areas at Florence. You can see all the equipment that's on site now. As I mentioned, we've got our general contractor hired down in Arizona. Detailed engineering is essentially done. So we get the final the final permit. We will mobilize construction crews within 4 to 6 weeks and get started right away. The construction schedule for Florence is very straightforward. As soon as we get that final permit, we'll go to the board and get approval and get started on construction. It's about 18 months to build from board approval to first copper cathode production. We're down in Arizona. It's not like we're up in the mountains in BC where there's a construction window. We can build year round down there. And it's a fairly straightforward, fairly small construction project. So if we get the final UIC later this quarter, we'd be looking at first copper production sometime about mid-2025, which, sitting here in late 2023 or mid-2023, that's not too far off. So we have a little bit more time. I'll touch on a couple of other projects. Yellowhead, as I mentioned, is in BC. It's just a couple hours, 3 hours from our Gibraltar mine. This would be a similar scale project to Gibraltar, but higher grade, therefore higher production. It will have a 25-year mine life and it'll produce 180 million pounds of copper per year over its life. So almost double our copper production again from where we're at with Gibraltar and Florence. But bigger scale project, a higher capex. Our 2020 capital estimate was 1.3 billion Canadian. Given the inflation we've seen here in the last year, 2 years, it would probably be quite a bit more than that. But you can see very good economics at 375 copper. Annual pre-tax cash flow of $330 million over the first 5 years, where we have a starter pit and some higher production. It's a great project, but we've probably got 3 to 4 years of environmental work ahead of us before we are construction ready. Most of our efforts today are working with the local communities, educating them about the project, the benefits for the community. So we hope to formally start the environmental assessment process later this year. And as I mentioned, there's sort of 3 to 4 years of work ahead of us there. So Yellowhead could be construction ready, so maybe about 2027. And that would fit well with our schedule with Florence. It would give us 1 year to 2 years to fully ramp up Florence, get it cash flowing, and we'd be in a much different position when it comes time to finance Yellowhead. So it's a longer term project, but also a very valuable project. New Prosperity, it's the original project of Taseko back from the 90s. In the 90s, this was the only project we had. As I mentioned, one of the top undeveloped gold copper projects in the world. There's 13 million ounces of gold here in resources. There's, as you can see, nearly 8 million pounds of recoverable gold in reserves and 3.5 billion pounds of recoverable copper in reserves. It'll produce over 20 years, anywhere from 20 to 30 years, depending what size it is. But the project's been stuck in permitting challenges, for quite a number of years. What's happened here, what's changed here is the provincial government has brought us together with the First Nations group in this area. And the three parties have been sitting down for a couple of years now on a regular facilitated dialogue, trying to find a path forward that works for every party. I think about all I can say here is, we've made significant progress. Those discussions continue, and we're confident that we will find a path forward for this project. What shape or form that is, I don't know. But the dialogue continues with both parties, or all three parties. And yeah, we have a fairly high degree of confidence that we will figure something out here. And it's too valuable a project. This project today would have upwards of a $4 billion NPV if you use gold and copper prices, current long-term gold and copper prices. So a very valuable project, and we're not just going to walk away or give up on it. So just to wrap it up, I think just the last few minutes, I'll just touch on this slide. And this is really the value proposition. That top right waterfall graph. Gibraltar today has this is in Canadian dollars. Gibraltar's got a $1.3 billion market cap, 1.3 billion dollar NPV. Florence, in Canadian dollar terms, has a $1.2 billion NPV. You take off our net debt of about $500 million Canadian, leaves an equity value of about $2 billion. Relative to our $500 million Canadian market cap, there's a huge valuation gap there of about $1.5 billion. We think most of that relates to Florence. If you value Gibraltar and take off our net debt, we think the market fairly understands and values Gibraltar, but it means we're getting nothing in our equity for Florence. And I think a lot of that is because we don't have that final permit. There's been some real permitting horror stories in the US with other mining projects. We are very different than those, and we're a lot further along. But we believe getting this final permit is when this re-rate starts to happen. Not going to say we close that $1.5 billion gap overnight on that final permit, but that is a significant catalyst for a re-rate to begin. Obviously, we still need to build it. We need to get it into production, but the permitting is out of our hands largely. But once we get that permit, then the fate of this project is in our hands. And I've got like I say, we've got the team in place. We have a very experienced team to build and operate Florence and Gibraltar. So we just want the fate to be in our hands, and then we're very comfortable getting this going and getting into production. So I think that's about it. Clay, if there's any questions, definitely.
You bet. No, great presentation. It's as far as a mining story goes, it's pretty straightforward. It's a lot of times we're talking with companies that are, they're in kind of development stages. It's kind of an unknown as to how soon or how long it's going to take them to, move the project into some kind of a cash flow position. Whereas, what's great about, you have both. I mean, you're already making money, you're driving a tremendous revenue line and EBITDA line earnings, and you got these great growth projects and upside with Florence bringing, that coming on. You never say it's a done deal, but it looks fairly imminent that you'll get that permit. And what you do, I mean, you're off the races. You said you're beyond shovel ready. You've done a lot of the kind of some groundwork, and long lead items have been, acquired or on the process of being acquired. So I think in terms of a copper story, I don't think you can find something that has better, growth and value at the same time. So yeah, if you have a question for Brian about either of the projects or about some of the pipeline projects, feel free to ring in. If you can do that with your Q&A icon, your chat icon. Today's code word is Florence. Their In-Situ project in Arizona. which I think is a real key value driver for the company. And so just you'll need that. So it's again Florence. You'll need that for your feedback form. And let's make a couple other quick announcements while we're wrapping up here. If you want additional information on Taseko, you can get that on their website, which is www.taseko, Taseko mines, mines.com. A lot of information on there. You'll find out all of the people who are covering the company, but the research reports are not on there, obviously. If you'd like a research report or two, send me an email. I'll get you I'll probably get you the Stifel and one of the other kind of more US-based firms, recent reports within, I think, the last 6 months or something like that. But if you like those, let me know. I can get those out to you. We have a question here. Let's see. Any issues around staffing the new facility in Florence? Good question.
Yeah, very good question, especially in light of what we're seeing around in North America these days. I can't even get a burger anymore, it seems. No, well, we haven't started hiring for the commercial production facility. One of the things about Florence is there's not a huge workforce there. Like at Gibraltar, we've got 700 employees. At Florence, we'll have about 200. A lot of those jobs will be local, but we also can access Phoenix as well. So we don't envision any issues there. We think we'll be able to staff it without. And we already have upwards of 40 people on site. So we're already on our way to staffing.
Great. Well, good stuff. I think we're pretty much at our time. So I don't see any other questions. Brian, thanks so much for coming on with us today. Is there anything you'd like to add before we wrap up today?
No, I guess just thanks everyone for taking time out of their August afternoon. Yeah, it's a very exciting time for the company. We feel we're right on the cusp of unlocking a lot of value for our shareholders. And yeah, I think if you follow the story, you'll see some real strong catalysts between Florence and Gibraltar here over the next few months. And hopefully that translates into a higher share price.
Well, we can hope. I think that it will find its new mean, new waterline. Copper is definitely a place to be right now. I think that, companies like yours are it's kind of hard to play the copper price on some of these big, Freeport type guys, because the copper price will move. It doesn't really move the dial too much because there's already such a big market cap. Your market cap, roughly $500 million. That could go up fairly significantly in terms of percentage of current value, current share price. So that's why we think it's a good leverage play on copper. All right, everybody. Want to thank you for coming on today. Wishing you a great rest of your summer. Do get those feedback reports back to us quickly, and then we'll look forward to having you on a future presentation with Torrey Hills Capital. Until then, be safe and be well. Thanks again, Brian. We'll talk to you soon.
Thank you. Thanks, everyone.